Hello traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for September 17th, 2023. And this week is going to be a central bank bonanza. Now, if my numbers are right, I think we've got 13 central banks that are actually meeting this week. We have the BOJ, FOMC, Bank of England, and so many more to talk about. So this is obviously going to be a little bit longer of a video. So just giving you a little bit of a heads up, but I'm glad you all are here. Matter of fact, if you like these videos and you think they are beneficial to you, getting through your trading week, each and every week, give us a thumbs up, subscribe to the channel down below so you don't miss any of these week ahead videos that we've been doing for at least 7-8 years now. Just with Forex Analytics. So make sure you do that. But we're going to talk about all these central banks. We've got some CPI data coming out, inflation data coming out around the globe. It is going to be a busy week. And then we got PMIs at the end of the week that are just going to, kick off going into the end of the month. So lots of things happening. The markets are moving. If you didn't see, the S&P closed near its lows on Friday against really key support. So we're going to go through all their charts. So let's get to it. As we do that, remember you can go through Forex Analytics and you can actually, follow through your live charts there. You can see them right here. You can also see all the news, headlines, calendar of events that we'll be talking about, so on and so forth. I am going to go into the live charts, and I'm actually going to take us over to a subset of charts that I keep for the week ahead video, specifically here, so we can actually do some drawing. And let's start off. Let's kick off the week and talk about. I'm just going to go right into the calendar, and let me get rid of myself here so you can so you don't have to see me. If you start off with Monday. Monday is actually, if you want, I should just say this. If you want to continue on with like a 3-day weekend theme that you've been having, we do have a holiday in Japan, I believe, on Monday. But look, there's not a lot of data happening on Monday, so if you want to take the day off, that's a good day to take off because Tuesday, Wednesday, Thursday, Friday, chock full of stuff, right? So that's just something I needed to make sure I said. All right, let's go into like Monday though. On Monday, we will have the RBA meeting minutes later Monday night. Well, it's actually Monday night later, on Monday. So Monday night, which is Tuesday morning, right? So look at the Aussie. Let's just start there. Now, I've long since thought we have a bear flag developing, and then we have this big double top, right? So you can see the double top, it actually still has further to go. I mean, we've got to drop all the way down to 62.80 before that even completes. So there's still some distance to go here, guys, on this double top. That's one. Two, it looks like there's a bear flag pattern. But some of you might not be looking at it as a bear flag pattern anymore because, you're like, well, the flag's kind of elongated. Well, if that's if you don't want to look at it that way, maybe you want to look at it this way and just start looking at it as a potential bearish pennant. Any which way you slice it, if we start getting an extension lower, that means that move has a long distance to go. Now, I have to say that the Aussie dollar has held up very well. But remember, we have meeting minutes. Now, the reason why the meeting minutes are going to be important because everybody's looking to find out what guidance they're getting from central banks, specifically the RBA, specifically with what's happening in China. China's throwing this big stimulus shotgun pellet approach, right? No big bazooka, just a shotgun with pellets going everywhere. Will that work? Well, the Aussie's holding up, but I have to say that stocks are holding up. So if the Aussie is holding up just because stocks are holding up, where's the growth prospects? Now, before I go into the rest of the calendar, I do want to pull up this chart because I think this chart is so important. And if you follow me via Twitter, you've seen it because I've talked about the importance of this consolidation. I actually tweeted about it this week. Look, I think copper is really going to give us that indication whether we're going to have a no landing scenario. I was actually just listening to one of the economists that have been very, very bearish. Bearish. How should I say it? Very much in the recession camp, and now has changed his tune as of this week. And a very big high profile economist that's on all the financial news networks. And I was like, huh? Wow, he doesn't see us having a recession in 2023. Well, if you look at the apex of this copper chart, right, we're going to break out like literally within the next week or two. And I think that is going to tilt in the direction of the way the global economy is going to go. So what I'd be looking for at this point in time is to watch which direction copper goes. And let me say this, if copper does break down, then you have to be looking for a possible breakdown in the Aussie. Now, remember, we're looking at Aussie meeting minutes, but I have to also point out that the Aussie's in a big triangle as well, right? So I think those are going to coincide with one another. If I had to guess, maybe one might lead the other a little bit, but copper, Aussie, global economy, health of the global economy, I think will be very easily seen in this chart and the copper chart. Okay, let's continue on because we got so much to talk about. On Tuesday, we have Canadian CPI. Even though we don't have the Bank of Canada this week, we have the CPI data, and inflation data is going to lead us to whether to believe that the BOC has further to go, or they might indeed be closer to lowering rates than maybe another central bank. Well, what you'll notice here is we had very big resistance. Now I'm going to get rid of this fib level. I'm going to get rid of those for a second, and I'm going to get rid of that. Now you can see we have this nice. You could argue that it's a channel. It's being formed. Whether it's like this, or you can take the lower end of it and say maybe we'll get up further and we'll do something like this, which I think is entirely possible. Let me just go ahead and duplicate that. The fact is the dollar Canadian has rolled back over. Now, I know a lot of you might be thinking, well, Blake, it's rolled over, so it's clearly changing its trend. My question to you would be, are you sure about that? Now, let me show you the reason why I'm going to say that. Because if you take this low to the high of this most recent rally, you'll notice that we have not even been able to hit a 38% retracement. That is the 200-day moving average. You see it right there? It resides right on the 38% retracement. That means to me that as long as we are above 134.70, and thing is, we can't even get below 135. But even if we get below 135, if we can't get below 134.70, you have to imagine that at a 38% retracement, when you have such a shallow retracement in the market, shallow, teeny weeny, right? Move, shallow. Move is this big, shallow, right? If you get a shallow retracement, that means that the next move is likely in what direction? Higher. All right. So if the dollar Canadian continues to hold 134.70, the risk is that it continues to break higher. That would happen, and there'd be more chance of that happening on weaker CPI on Tuesday. All right, let's continue on. US, we have actually housing starts. Housing starts and building permits are going to be really important for the market to watch. And the reason why I say that is because the housing market is probably one of there's two things, in my opinion, that continue to keep the economy from, I don't want to say imploding. Imploding is not there. And I'm looking for my dollar index chart I don't see it for some reason. Oh, there it is. Okay. So there's two things that are holding up the U.S. economy, in my opinion. One of them being the jobs market. Obviously, you even look at the weekly unemployment claims that we had last week, and you're like, wow, that was a decent number. Our labor force continues to be strong. You could argue the breadth of the labor force, the quality of jobs. I get all that, but what the market's trading on is the numbers that you see here. Okay, so you got the jobs numbers. The other is the housing market. Now, the housing market's obviously in a quagmire because you have interest rates that are so high that people that have home loans that are below 4%, 3%, they just don't want to move because you don't want to sell your home and then you can only get another 30-year mortgage at 6.5%, 7%, even with a point reduction from your mortgage broker, from sellers, whatever it is. The fact of the matter is it's too expensive for somebody who's locked in a mortgage to move. And the flip side is, buyers are balking at the price or what it's going to cost to actually take out a loan to get, a 7% loan or whatever the rate ends up being. Regardless, we're at a little bit of a stalemate. Now, the reason why we're at a stalemate is because the labor force is so strong. Because if the labor force, if people start losing their jobs, then they can't pay their car payments, they can't pay their mortgages, and then that's when the housing market starts to slip. So, reason why I'm mentioning all this is because if you are following the U.S. economy fairly closely, you want to pay attention to what the housing starts are, the building permits, to see if those builders are still bringing down or continuing to build, to bring to quelch what demand there is out there. But the fact of the matter is, they're going to struggle too because they can only offer so many discounts on the rates to try to attract buyers. So it's going to be really interesting to watch the U.S. housing picture over the course of the next, I would say, 6 months to 2 years. Is going to be a very, very interesting predicament we find ourselves in. All right, so. With that being said, obviously you're looking at the dollar. The dollar's getting towards really key resistance. You notice we almost got to the 161% extension of this move, right? That move. And the fact is, if we start breaking above these highs right over here is 105.90, then you start making. We already making higher highs, but then that's when you start forming the idea that any dip now is going to be bought. Right, because once you get above these highs that you see here, that's around the 106 level, then you have clearly higher highs, and then you'll start to probably form higher lows and find buyers on dips at previous resistance levels. Now, we're not there yet. We're not even close to being there yet. But I want to point out just the development that is occurring right now. One of the other developments, if you guys, are subscribers to the Death Cross and the Golden Cross, you can see that the 50-day DMA, which is this orangish yellow line, if that crosses above that 50 or 200 DMA, which is the red moving average, that's when the 50-day crosses the 200-day, you would have a quote-unquote Golden Cross. Well, we had a Death Cross right here, right? And you can see, we had some downside pressure, but if we have a Golden Cross right here, I'm sure we'll probably see some upside pressure. Does that mean that the dollar index is going to all-time highs? Probably not. I actually would argue that it's not. But I think you got to be respectful of the change of wind, sea of change. Okay, as long as nobody is farting, then I guess we're going to be good. All right, so with that being said, I'm going to continue on. All right, on Wednesday, we have German. Let me get rid of this really quick. I'm going to get rid of all these drawings. I don't think we need all the squigglies. So we have German producer prices late Tuesday night for me, but early in the morning then. And then also we have UK CPI. But let me start with producer prices out of Germany because, will it be a market mover? It could be. One thing that I want to point out with the inflation data that we're going to see, we got so many central banks that are meeting this week. So when you look at the euro, you're like, okay, the euro could move based on the German PPI data, sure, but what's most important is the FOMC, which has nothing to do with Europe, but because the euro is so much of the dollar index, that it's going to influence the euro, obviously. All right, so let me start by saying here that hopefully you guys, going back to last week, hopefully you did well. I have to say that my analysis of what I thought central banks were going to do was pretty good because I was thinking that the ECB was going to be at least hawkish, but then some articles came out that said, from Reuters, that the ECB was going to maintain a higher inflation forecast for 2024. If you missed that article midweek last week, well, that's what happened. And unfortunately, we didn't get the price action that I wanted, because what I was really hoping for in the euro is I was hoping for a squeeze, like a bigger squeeze than we got. Like we only moved to, you know, when I saw you last week, we were at 107, and I was looking for a move really towards 108 to sell into. We couldn't even get above 107.70. Now that's so if you think about that, it's a pretty bearish price action for the euro just as a whole. The thing that, you know, we've been pointing out here on the week ahead video and throughout the course of the week. If you don't know where to catch us during the week, guys and gals, remember we do free shows throughout the course of the week. We have the Flow Show, which is in European hours. Ryan Littlestone and K-Man, they host that, and then you have the Face Show that Dale Pinkert hosts, that I'm on, and also Ryan and K-Man and, you know, and other of our staff members. Gregor Horvat was on there a couple times this week as well. You guys can jump in and get our updated views throughout the course of the week. So the reason why I point that out is because, again, you know, when you're looking at the euro, one of the things that I was I've been very adamant about is that the bounces have all been very shallow, which just suggests that we're going lower. And, you know, we closed near the lows of the week. That's a fact. Now, what the euro does from here has more to do with the FOMC, but I do want to point out some pretty key technical levels. So if you look at really, you know, just going to the last like major squeeze higher from here's the low to the high, you'll notice that when we hit that, I wouldn't say all-time high, you know, we hit that multi-year high in the euro. That was our last like kind of gasp of a rally. 161% extension still comes down at 105.50 roughly, right? And if you take that same, you know, fib level, you come down to this horizontal support, you'll notice that, you know, we start breaking through this horizontal support here. You know, that can open up the 104.60 level. Now, before you go, oh, well, you know, look, we can drop to 105. Before you go there, I want to show you something else. If you haven't been listening to our shows throughout the course of the week, this is really important. Probably the most important level you're going to see here in the euro. If you take that fib and you go all the way down to these lows where we thought, you know, basically Europe was going to fall off the face of the earth. I'm joking, it wasn't. To, you know, that low to the high, you'll notice that 38% retracement. Remember, we were just having this conversation about a 38% retracement would mean a shallow retracement, which means that, you know, we could really continue higher. Right. The same thing is faced with the euro on a long-term basis. We are at that 38% retracement. If we really break below 106, there is a risk that the euro can really slip. And, you know, we're below the 200-day moving average. I know a lot of people are like, you know, they're fading the dollar as the dollar is rallying right now. I see it. I know it. You know, positioning is still very, very long euros from us, you know, the CFTC, you know, COT commitment of traders report still shows that euros, you know, fast money still long euros. Now, sentiment may be a little bit bearish euro near term, and positioning may be a little bearish euro near term. But what I'm trying to point out is if we start breaking below 106, I'm definitely going to be bearish. But more importantly, because of positioning, I'm still looking to sell euros on rallies. So that would mean that post FOMC, I'm still looking to buy dollars on dips, because we're going to come down to that argument on who has the least dirty shirt on in your hamper, or which shirt is the least dirty shirt in the hamper. And I think the winner is going to determine, you know, where the strength in the currency market comes from, which currency. And I believe that the US dollar still will probably end up being the least dirty shirt in the hamper, you know, over the next several months. So with that being said, selling rallies in the euro makes sense. If you can get a rally back up towards 107.70, 107.50, you know, as long as we stay below like 108 and a quarter, somewhere around here, you just want to stay on the short side of the euro, and I still believe that. All right, I'm going to continue on because we got so much to talk about, and I'm only into Wednesday morning. All right, we also have UK CPI. Now, look at the cable. We have a head and shoulder pattern that's playing out. You could say, oh, Blake, it's not a head and shoulder pattern. It is a bearish wedge. Okay, what if you want to argue that way, that's fine. It gives us the same result. Doesn't really matter. The result is that the pound closed on its lows. We have the UK CPI on Wednesday. We have the Bank of England, who is expected to raise rates another quarter, and maybe that's it. How about if that inflation data comes in weak? Now you're going to have you're going to have a real, you know, problem going into the Bank of England on Thursday, right? So just keep in mind, guys, we are closing on our lows here. We did close on our lows, not closing. We closed on our lows for the week, below the 200-day moving average. Technically, it looks gross. So let's figure out how gross and how far it could go. Well, if you take the same distance I was showing you on the euro, you take the spike low to the high. Well, 38% retracement takes us down to 121. The head and shoulder pattern targets 119 and a quarter. So I would say that, you know, between 121 and 119 is probably a realistic target if the dollar continues to rally, or more importantly, if the sterling continues to sell off. Okay, so where's resistance right now? Well, resistance is on any rally back up to like 125.50. I think you're going to have people gladly getting out because of the technical bearish development that has been unfolding the last couple of weeks. Hey, if this is your first time here at on the week ahead video, you can see these drawings are from last week, and you can see how things are developing. So make sure you're here each and every week. Matter of fact, if you want to take advantage of these videos, the best thing to do is take a look at Forex Analytics. Subscribe to Forex Analytics. It's only $1 for 10 days. Try it out. Then you can be inside one of the most busy trading communities in the markets, and you can see just all the conversations that happen and charts that we're posting throughout the course of the day, throughout the course of the week. You could have a piece of that by being part of our community. Get the mobile app. Make sure you put the mobile app on your phone. I don't think there's any other company that gives you a mobile app with analysis like us. And we've been doing it we've had an app out there for at least the last 5 years, iOS and Google Play. Also, if you really want to take advantage of these moves, check out the Trader Funding Program if you want to learn how to trade our money, right? And you want to learn how to trade a larger account. You don't have a $25,000 account or $1 million account to trade. Check it out. Check out the Trader Funding Program and see if it's right for you. You have to take an assessment. You pass an assessment, and then you can access our capital. Okay, continuing on. So here's the ideas with the sterling. I'm going to continue to move towards throughout the course of the week. We have Canadian meeting minutes on Wednesday. We already talked about the dollar CAD. Then we have the FOMC. All right, so going back, and I want to talk a little bit about the dollar index here and where we're at. Is the dollar overbought? I don't know if it's overbought, but you can see relative strength is divergent right now, right? As price makes new highs, you can follow my cursor here. Price makes new highs. You see relative strength is not. So does that mean it's a sell here? No. Because what if the dollar index breaks out? What do you think is going to happen with relative strength if the dollar index breaks out? I'm just asking you a question. Dollar index breaks out. What do you think happens to RSI? It breaks out, doesn't it? Right? Next thing you know, you'll be saying, well, I guess I guess divergent relative strength didn't matter, right? Dollar index can still go. And let me also make something clear on relative strength. We're nowhere, or we're well below places we've been many times. So if you don't think the dollar can continue to go higher, you're clearly not looking at the charts here, or maybe your interpretation of the charts are, not what they should be. So are we divergent on relative strength right now? And you notice I don't put on a lot of crazy indicators. You guys have been following, those of you that have been listening to me literally for about 2 decades now, know my charts look exactly the same. I don't put any wonky type of crazy stuff on there. It's very basic technical analysis. It's just understanding how to use your tool, and then your tools and tool, you know what I mean? You know what I'm saying, right? Right. No, but understanding how to use the tools in front of you, and that's, what I'm showing you here. But the funny thing is that I'm not showing you, any type of, weird indicator or some super special, no, this is the same stuff you all look at with the same settings. It's just how you use your tool. And it's the motion of the ocean, right? Okay, anyway, continuing on. Dollar index, FOMC. We've seen just ridiculously resilient US data, which means that the Fed has further to go. And if they clearly state that and they make it abundantly clear during the FOMC that the Fed's going to probably raise rates in November because they're probably not going to do it. They're going to pause this meeting. There's a good chance that the dollar can continue to rally as everybody's looking at other central banks saying that they're done. And we're going to get a good picture of that this week, aren't we? Considering that you're looking at a spectrum of 13 other central banks, you look around and you go, wow, after this week, if we look around and we say, well, the Fed, hell, that looks like they're going to raise rates in November, and maybe they're going to just keep them high here for a long time, or maybe they could even go further than that. If the market starts feeling that way, the dollar index has a lot further to go because you look at other economies and how growth is really deteriorating. It's still very, very robust here in the US. It is. Okay, so with that being said, you guys know all the technical levels that we talked about. Here's the other thing I want to point out as far as the dollar index goes from a technical point of view. Dips should be bought down to where they were. Here, let's zoom in on that chart a little bit. This broken channel that we've been watching for months and months and months, right? Any dip back down to 104.50 should be finding buyers. Now, if we get back below 104.50, that's where the dollar starts to take a turn for the worse, technically. If we got back below 104.50, that means that we probably walked away from the FOMC meeting thinking, oh my gosh, maybe the Fed is done. And maybe they're seeing some weakness, on the horizon that we don't see. That means they'd have to be really damn dovish on Wednesday. So, all right, let's continue on. So we have South Africa CPI on Wednesday, night or Wednesday late afternoon. New Zealand GDP is going to be Thursday morning, or Wednesday night for those of us in the United States. Notice the Kiwi, very similar to the Aussie. I'm getting rid of some of the stuff that I drew from obviously last week. We can't even get above resistance. I mean, this is just, and let me delete these blue lines here. This is just a bearish consolidation around the 618 retracement. What does that mean? That means that we're just buying time, can't rally. And, something that I always say to you guys and gals, if it doesn't go up, usually only has one other direction to go. And you might say, well, it could go sideways. Yeah, we're going sideways, but the longer we stay sideways and not bouncing, the more the risk is that buyers get bored, they get scared, they get nervous, and they start hitting bids. And next thing you know, you're trading down at 57 cents. All right, so watch this Kiwi with GDP numbers coming out on Wednesday. Thursday, one of the charts I don't bring up quite a bit, but I'm going to do it here, is I'm going to bring up the USD Swedish krona, the US dollar Swedish krona. Now, I'm going to do that with you guys because we are at the 78% retracement. the Riksbank is expected to hike, but a lot of people are believing that the Riksbank might actually be hawkish. So if you want to play dollars to the downside because you guys are so bearish the dollar you can't even see straight, then we're up against really key resistance here. If we hold the 78% retracement, this might actually be a decent short. For those of you that are dollar bears, just because I'm at this point not a dollar bear doesn't mean that the dollar can't have a turn for the worse. It sure can. And the way to play it though is if let's say the FOMC on Wednesday ends up being a little bit dovish and the dollar pulls back, then watch the US dollar Swedish krona, because if the Riksbank's super, hawkish, then next thing you know, you got the US dollar Swedish krona trading back towards the 200-day moving average, which is pretty far. All right, so Riksbank, we have the Norges central bank. Now, the Norges central bank, you'll notice we're right up against the 78% retracement. We are expecting a 25 basis point hike, but a lot of people are asking, is this going to be the last one? And considering that the Norwegian krona cannot gain strength even when crude oil is ripping is crazy to me. So, anyway, so if we break above the 1078 level, that's very bullish. We have Mexico retail sales. I'm going to pay attention to the Mexican peso right now because we got so much other data. We have South Africa. They have CPI on Wednesday, but they are making their decision on interest rates on Thursday. You can see we're just like little consolidated here. Now, the next central bank I really want to talk about is the BOJ. That happens on, and let's get over to the US dollar Japanese yen. That happens on Friday morning, which is actually Thursday night for us. The BOJ time is always kind of a moving target. Unlike other central banks that gives us a time for their rate statement, the BOJ doesn't. Now, we will have national CPI actually, from what I understand, a little bit before the BOJ. But I want you guys just to look at price action here. And I'm like a lot of traders. I try to trade. Well, A, I try to trade on both sides, but B, if you see moves that are really extended, I try to, fade them, play, counter trend trades. The yen has been one that for me has not worked out well. I've been trying to buy yen. I see us dipping, back below support. I might be getting short, might do it on some crosses that are up against resistance. But the fact is the dollar yen continues to point higher, and it looks like 150, or at least the top of this channel at 149.50, is still very doable, say with the bull flag patterns here. So I bring that up because we have the BOJ this week, and even though everybody expects the BOJ to keep their stance the same as far as YCC goes, a lot of the market is wondering, are they going to wind it down in October or before the end of the year and start moving away from their negative interest rate policy, at the end of this year, the beginning of next. So the closer we get to that, the closer we get to a potential turn higher in the yen or a reversal. But we got to hear it from the BOJ, and we have to hear it from Ueda, first and foremost. So right now, and the other thing that you got going for you with this US dollar Japanese yen continuing higher is you got yields that continue to rip higher. You go look at the 10-year yield; they're moving higher as well. So BOJ is going to be a big deal, and that is going to be Thursday night if you are in North America or in the Americas, and then also it'll be very, very late if you're in Europe. I can almost guarantee you, our European team. The guys that trade from the UK and Europe, they're probably going to be in the chat room, even though it's going to be ridiculously late because this is such a big event for the BOJ on Friday morning, Thursday night, Friday morning in Japan. A couple other things that I really want to talk about. We have UK retail sales. We have so many PMIs. If you look at all the PMI data coming out on on Friday. Let me just kind of map them out for you. You have French PMIs, German PMIs, the Eurozone PMIs, UK PMIs. We have US PMIs. So there's going to be a lot of the PMI data and those purchasing manager index, both on the services and manufacturing front, are going to be a big deal because we've seen such a big contraction around the world. And matter of fact, if you look at the German manufacturing, now remember, Germany is a manufacturing powerhouse like China, right? German PMIs are at 39.5 on our last reading. Remember, 50 is the contraction, holy cow, lost of words. Brain fart. Anyway, expansion contraction line, right? 39.5. We haven't seen data that bad since I had to go back and look at the charts. Let me see if I can pull up the chart. I think it's GFC. Did COVID they dip? Anyway, go look at a chart sometime in the German PMIs. It's disgustingly bearish. So that data is going to be really important going into the end of the week. We also have Canadian retail sales, which we should pay attention to. Now, I'm gonna go into a couple other things. I am going to talk a little bit about the equity markets because I think it's really important that we talk about those and where we're currently at. So I do want to talk about the S&P and I want to talk about what's happening in the bond market, but I'm going to make it a little brief because I know this video has gone on really quite some time. But let's start with the S&P. So the S&P, the reason why this is important is because we closed at really critical support. Now, is there still a head and shoulder pattern developing? Potentially. We've been talking about it, how we're really at, if you want to talk about symmetry, we're at the week where we should turn lower. There's a lot of people that have been saying, because it's the Rosh Hashanah holiday, it's going to be a bearish week in the markets. I don't know if we're going to be, but I'm going to tell you this much. We're at some pretty critical support here, and I'm going to show you what it looks like. Okay. There's your triangle consolidation. We're in a very solid uptrend, but in a triangle consolidation. Now, on a near-term basis, if you were following me via Twitter, you probably saw something that looked like this. That Gartley pattern gave us a hella reversal oops, that's not what I wanted. It gave us a hell of a reversal on Friday. This is my chart of the day on our blog. So, if you want to access the blog, you can just go right here and just go to the chart of the day of the S&P on the 14th, right? That was the chart that I was showing you, okay? We reversed and obviously coming down towards triangle support. Watch the support. It's going to be really, really key for the bulls beginning of next week. Are we going to break down? Are we or aren't we? I don't know. It's always hard for me to be short right at the beginning of the week because we call it Mutual Fund Monday. You get a lot of funds coming in, a lot of money's hitting the market on Monday. So, could we bounce and then maybe sell off get a turnaround Tuesday? So maybe bounce a little bit and then get a sell off on Tuesday. It's possible, but I just watched this triangle. I think the triangle is going to tell you everything. I want to also cover crude oil. Crude broke. And, I know we talked about this a couple of weeks ago, but what a big breakout point, right? Big breakout point. And you can see we're, on our way to 96. And we closed not at the highs, but near the highs of the week. Or look at the daily chart. It's bullish. Are we overbought? Yeah. Can we become more overboughter? Yeah. Look at relative strength. And go tell me where we've seen higher levels of relative strength. Well, you can say, we've reached higher levels here in February. here in of 2021, here in March of 2022, and we're not anywhere close. So could we reach all the way for the mid 90s before our RSI becomes too overbought or extremely overbought? Yes, yes, and yes. So looking at crude still has some distance to go. And one of the other things I wanted to bring up right now is I want to take a look at the gold market. We've talked about gold potentially, making its way down in this this descending wedge. Now we had a little bit of a bounce to the descending trend line, right? You can see it right here. Will we break out? I think it has more to do with the Fed and the dollar. So if the dollar continues to break higher, gold's probably going to slump lower, and it's going to push back down towards here. But I think we're at some pretty key resistance, and even silver is holding some support as well. I want to just really quick look at the German DAX because the German DAX got a nice little boost following the ECB, because everybody walked away from the ECB meeting thinking, okay, they're done raising rates. So if they're done raising rates, yay, I'm going to start buying German stocks. But don't forget, those PMIs are pretty bad too. So yeah, we're at you could see 50 DMA has been kind of containing us on rallies. Support is the 200 DMA. Keep an eye on that. And the Nikkei still looks pretty damn good, I have to say that. All right, with all that being said, guys, gals, I want to say if you feel that this week is going to be, you're better prepared this week because of things that I said, make sure you give us a thumbs up, subscribe to the channel, check out Forex Analytics, check out the Trader Funding Program, and I will see you on the Face Show Monday morning. Hope you have a great remainder of your weekend. Thank you for spending your time with me, because I know it's really, really valuable to yourself. Thanks. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.